Hi students, so today's concept is concept number 2, accounting treatment of goodwill from the admission of a partner chapter. Okay, this is for PUC-II students. Let us start. Concept number 2. If in the question OPSR and new partner profit sharing ratio are given, means two information will be available relating to profit sharing ratio. One is OPSR and the other one is new partner profit sharing ratio. And new partner bring the cash for goodwill. In the adjustment they will give that he bring the cash for goodwill, and half of the goodwill amount is withdrawn by the sacrificed old partners. Goodwill brought by the new partner and goodwill amount is withdrawn by the partners. Let us start. Mr. A and Mr. B are partners in a firm. In this partnership firm, there are two old partners. One is Mr. A and the other is Mr. B. Sharing profits and losses in the ratio of 3:2. So their ratio is 3:2. It is OPSR. Their balance sheet as on 31st/3/2024 was as follow. Was what is used? It means that it is an old balance sheet. Balance sheet of Messrs. Mr. A and Mr. B as on 31st/3/2024. So left hand side capital and debt is amount rupees, right hand side assets amount rupees. Capital Mr. A, Mr. B. Asset cash or bank. Draw the format like this. I am not taking the amount because our focus is only on the accounting treatment of goodwill. On 1/4/2024, they admit Mr. C into the partnership on the following terms. This question is relating to admission of a partner because the word used is admission. Now come to the conclusion. Who are the old partners? Mr. A and Mr. B. What is the OPSR? 3:2. What is the old balance sheet date? 31st/3/2024. The date on which new partner is admitted into the partnership firm on 1/4/2024. Who is the new partner? Mr. C. Adjustment number 1. Mr. C should bring in cash rupees 25,000 as his capital and rupees 15,000 goodwill for 1/5 share in the future profit. Here new partner bring the cash for goodwill. Next, half of the goodwill amount is withdrawn by the old partner, means sacrificed partners. Half of the goodwill amount is withdrawn. That's why when the new partner bring the cash for goodwill and half of the goodwill amount is withdrawn by the old partners. Show the accounting treatment of goodwill as per AS 26 by preparing partner's capital account and cash or bank account. This is the question. So everybody pause the video and note down the question. Move on to the solution. Solution to concept number 2. Step number 1 is to working note number 1, calculation of sacrifice ratio. In case of admission of a partner, if the new partner bring the cash for goodwill or does not bring the cash for goodwill, but sacrifice ratio is required. Sacrifice ratio is equals to OPSR. Why? In the question, OPSR and new partner profit sharing ratio are given. There is no other information. That's why the OPSR itself is the sacrifice ratio. Sacrifice ratio is equal to Mr. A ratio Mr. B. Sacrifice ratio is equal to 3:2. Okay. Note down this answer. Working note number 2. Accounting treatment of goodwill as per AS 26. Journal. Draw the journal format like this. Date, particulars, LF, debit, credit. Ready? If the new partner bring the cash for goodwill, what is the entry? Step number 1. Cash or bank account debit. You may write the cash or bank. In the question cash is given, use the cash account. If bank account is given, write the bank account. Cash or bank account debit rupees 15,000, only goodwill amount. 2. Mr. C's capital account rupees 15,000. So cash is a real account, debit what comes in. Mr. C's capital account is a personal account, credit the giver. Being cash brought in by Mr. C for his share of goodwill credited to his capital account. This is step number 1. When the new partner bring the cash for goodwill, step number 1. For that we have to follow the 2 steps. Now I have completed step number 1. Now write the step number 2. This goodwill amount is credited to the Mr. C's capital account. We have to remove that goodwill amount from the C's capital account and transfer it to the Mr. A and Mr. B because they are sacrificed. So that's why sacrificing partner capital, new partner capital account debit to sacrificing partner capital account. Now it is as per adjustment entry. Why? Now I am closing this C's capital account. In order to closing means transferring the goodwill amount from C's capital account to sacrificing partner. Earlier C's capital account was credited. Now we should debit it. Mr. C's capital account debit rupees 15,000. Distribute this goodwill to the A and B rupees 6,000. When the new partner bring the cash for goodwill, we have to pass the 2 steps. Step number 1 completed. Step number 2. Step number 1, receive the amount and credit it to the C's capital account. Step number 2, transfer from C's capital account to sacrificing partner's capital account. Being cash brought in by C, credited to old partner's capital account in sacrifice ratio of 3:2. When the new partner bring the cash for goodwill, 2 journal entry. 1, cash or bank account debit to Mr. C's capital account means cash or bank account debit to new partner capital account. Step 2, new partner capital account debit to sacrificing partner's capital account. That is Mr. C's capital account debit to Mr. A's capital account to Mr. B's capital account in sacrifice ratio. Only goodwill amount. But in this question, half of the goodwill amount is withdrawn by the sacrificed old partner. That's why we have to follow one more step. Step number 3. Mr. A's capital account debit, personal account debit to the receiver. His share of goodwill is 9,000. This 9,000, its half is 1/2, 4,500. To Mr. B's capital account, his share of goodwill is 6,000. Bring this 6,000 here. Its half is 1/2, rupees 3,000. To cash account, real account credit what goes out. 4,500 plus 3,000, 7,500. Being half of the goodwill amount is withdrawn by the old sacrificed partners. If you are following this as per American accounting system, when the new partner bring the cash for goodwill, cash is asset, increase in the asset, debit. And that amount is added to the C's capital account, increase in the capital, credit. Understanding or not? Okay. And second step is to close the C's capital account, transfer the C's goodwill amount from the C's capital account to old sacrificed partners. So when you are transferring the amount from C's capital account, his capital account decrease in the capital, credit. So debit, decrease in the capital, debit. This amount is adding to the A's capital account and B's capital account, their capital increase in the capital, credit. Step number 3. When half of the goodwill amount is withdrawn by the partners, they are taking money from the bank or cash. You are writing the entry from the point of view of partnership firm. So at that time, A's capital account debit because decrease in the capital, debit. B's capital account debit, decrease in the capital, debit. Cash is asset account, decrease in the asset, credit. So I explained the entries as per the American accounting system or accounting equation approach, or as per the England or British system. Pause the video and note down it. Partner's capital account format. We can summarize in the shortcut way, another way video. Wait 1 minute. Okay. We go to the next video, 1 minute. Ah. 1 minute. I'll check it. I can give in a summary way, all in one format. I'll check it. Okay. Come to the draw the partner's capital account. and cash or bank account. Ready? Draw the partner's capital account or cash or bank account. Let us start. When the new partner bring the cash for goodwill, what is the journal entry? Cash or bank account debit to Mr. C's capital account, new partner. Before that, if there is a balance, you write it, balance brought down. That is not important for us. Now, when the new partner bring the cash for goodwill, cash or bank account debit to new partner capital account. Cash or bank account debit, new partner is to Mr. C's capital account. Goodwill amount. Working out number 2, step number 1. Amount is 15,000. Next. This is as per active wise. Right in the passive wise. Mr. C's capital account is credited by cash or bank account. Goodwill amount. Working out number 2, step number 1. 15,000. I have taken this 15,000 from the cash or bank account. Okay. 15,000. Understanding or not? We have to write in the both the accounts. And the new partner bring the cash for goodwill. First you write on the debit side of the cash or bank account. Second step is to write in the partner's capital account on the credit side. Next step. We have to distribute this goodwill between or among the old sacrificed partners. For that, entry is that we have to transfer the amount from C's capital account debit to A and B's capital account. That's why Mr. C's capital account debit to Mr. A's capital account. Goodwill in sacrifice ratio 3:2. That is 15,000 into 3 by 5. It is 9,000. To Mr. B's capital account. Goodwill in sacrifice ratio 3:2. Working out number 2, step number 2. That is 15,000 into 2 by 5. It is 6,000. Okay. Next. When the new partner bring the cash for goodwill, we have to follow the 2 steps. Sorry. Next. Half of the goodwill amount is withdrawn by the partners. For that entry is, sorry. So when the new partner bring the cash for goodwill, first you write on the cash account debit side, partners C's capital account credit side. Next you distribute this goodwill. Debit side A, P. In the A and B's capital account, contra entry. Sorry, I am not feeling well. Okay. Now, we have to take that amount on the credit side because Mr. A's capital account is credited by Mr. C's capital account. Mr. B's capital account is credited by Mr. C's capital account. 9,000 from that C's capital account to A's capital account. 6,000 from here. I think everybody understanding it. If you don't want to follow the rules of debit and credit, just you want to solve the question, first you write in the cash or bank account to Mr. C's capital account, new partner capital goodwill amount. Second step is to write on the credit side of the C's capital account. Then transfer this amount to the old partner, sacrificed partner. C's capital account debit to Mr. A's capital account to Mr. B's capital account. When all the accounts are in the same format, it is a contra. So in C's capital account is it debited, A and B credited. That's why A and B credited by Mr. C's capital account. This 9,000 is taken from here. This 6,000 is taken from this place to this place. Okay. Next, half of the goodwill amount is withdrawn by the old partner. Mr. A's capital account debit, Mr. B's capital account debit to cash or bank. Half of the goodwill amount withdrawn. Okay. This 9,000 into 1 by 2, 4,500. This 6,000 into 1 by 2, 3,000, B column. Okay. So, totally when the new partner bring the cash for goodwill and half of the goodwill amount is withdrawn, we have to follow these many steps. So, in order to understand it, open the journal entry and check it. Write the entry in active wise, passive wise. Lastly, I will tell you, when the new partner bring the cash for good, step number 1, cash or bank account debit to C's capital account. C's capital account is created by cash or bank account. Second step, distribute this goodwill. Mr. C's capital account debit to Mr. A's capital account to Mr. B's capital account. Come to the A and B. A's capital account is credited, B's capital account is credited by Mr. C's capital account. And half of the goodwill amount is withdrawn. Mr. A's capital account debit to cash or bank account to Mr. B's capital account debit to cash or bank account. Now we have to write in the cash or bank account. Here for this, B's capital account debit to cash or bank account. Sorry, A's capital account debit to cash or bank account. B's capital account debit to cash or bank account. Cash or bank account into 1 by 2. This 3000. 3000 from this account. Okay. So this is the step number, goodwill accounting concept number 2. When the new partner bring the cash for goodwill and half of the goodwill amount is withdrawn. In such a cases, we have to pass the 3 journal entries. When first, cash or bank account debit to new partner capital account. Second step, new partner capital account debit to old sacrificed partners capital account. When half of the goodwill amount is withdrawn by the partner old sacrificed partners, sacrificing partner capital account debit to cash or bank. Come to the balance sheet. So new balance sheet of Messrs A and Messrs B, Messrs A, B and C. As on 1/4/2024, capital account Mr. A, Mr. B, Mr. C. We are not writing the capital balance because we are focusing only on the goodwill, cash or bank account. This is the format. Thank you. Students, if you are understanding it, it is useful to you. If you are thinking that it is useful to you, like it, subscribe it and share it to your friends. We are continuing on the next concept from